I made a video just about a month ago on my thoughts on Tesla stock and why I believed this company and the stock was headed for $1,000 per share here in 2020. Well, that day has come and the stock did surpass this milestone recently, even though it has sold off a bit since hitting this. This target of $1,000 per share came much quicker than I expected, and now the stock has officially tasted what being $1,000 per share is like. There are questions I'm starting to see pop up asking if Tesla stock is a buy, considering it is so expensive here today. So this is the purpose of today's video. We're going to be discussing Tesla stock. We're going to be discussing its valuations here at $1,000 per share. Look at some analyst action that's been going on around the stock that's been causing some volatility in Tesla. And then we're going to look at some valuation metrics that I look at personally for Tesla to figure out if $1,000 per share is cheap for this stock or is just too expensive right now and maybe we should consider selling. Of course, guys, you know I'm a huge Tesla bull on channel, and if you support me on this journey here with my Tesla stock, make sure to drop a huge like down below. And if you're a Tesla bear, just let me know in the comment section down below what your bearish stance still is with this company. So let's start off this video with kind of what analysts are saying right now about Tesla stock. But we know that analysts aren't always correct here. Most of the time they're actually wrong here with their predictions. But it does give us some insight as to where money is flowing from Wall Street into. And this can help us with some investment decisions if we're smart about it. So just this past week, we had two big firms come out and downgrade the stock. So that did add a bit of volatility here. And ironically, this was when Tesla hit $1,000 per share as well. First, we have Morgan Stanley here, who gave some reasons as to why they downgraded the stock. They stated that they believe competition from some of the big dogs has picked up, and this will result in more pressure on the industry of autonomy. This, of course, is Tesla's main domain, so this could mean bad news for Tesla. They specifically mentioned Amazon here as a possible threat, and this is a possibility as there has been headlines recently that Amazon is buying out Zoox, which is an autonomous self-driving company, which signals to me that Amazon does want to get into this space as well, possibly with their delivery trucks at some point. This all resulted in a new underweight rating here for Tesla stock, and they've reduced their price target from $680 per share all the way down to $650 per share. Now really, a reduction of $30 in the stock is not a huge concern to me and shouldn't really have made headlines here. But you know, Wall Street loves to showcase any bearish news on this company, so I guess any downgrade, no matter how big or small, is going to make big news. The second big name here that we had come out with a bearish stance on Tesla is Goldman Sachs. Goldman Sachs has been a polarizing name in Tesla, especially in 2019, setting some ridiculously low price targets which drove a lot of selling in the stock. This company has a lot of pull with the investment world, and a lot of big name investors do look at Goldman Sachs for their predictions to determine whether they should buy more shares, sell their shares, or continue holding their shares. But what we did see was that eventually Goldman Sachs did turn bullish and rode the wave up in this stock, and it absolutely exploded here in 2020. It stated here that they upgraded it to $950 per share earlier, and the stock is now trading higher, so they decided to go ahead and downgrade it. No new price target is set, but we know it's now at a neutral rating, and although these headlines seem to be spinning this as big negative news here for Tesla, a neutral is just that, guys, neutral. The firm isn't willing to really make any big bets either way, up or down, with the stock since it touched $1,000 per share. Analysts will always be upgrading and downgrading stocks. That's their job. That's what they do. And as investors, we shouldn't just blindly follow them, but we should use their information to figure out where momentum is shifting in these sort of companies. Like I said, Goldman Sachs, for example, has huge pull in the industry. When they downgrade a stock, you will typically see that stock move down significantly the next day, and it's noticeable. And when they upgrade, you typically see the opposite happen as well. So there's clearly a lot of eyes on these analysts here and what their thoughts are with these companies and industries. Now, because I'm a long-term investor, I like to look for opportunities for many years out. I still follow these analysts here because when they downgrade stocks and a stock moves down irrationally because of that, I use those opportunities to buy more shares into businesses that I love. Remember, you typically want to buy into companies when pessimism is at its peak, when everyone's bearish on the company. If you believe the company can get through the struggles that they're going through, and if they can be much larger and more profitable in the future. That's exactly what I saw with Tesla in 2019. So I stuck to my guns, had my convictions set, and I just kept buying shares as everyone else around me was selling them. So now let's kind of shift gears into more of an analysis part of this video, and let's try to figure out if $1,000 per share here for Tesla is overvalued, or if this is a good price here when we're looking at the stock a few years out. We're looking back to 2020, $1,000 per share. Wow, that was really cheap for Tesla. Let's figure that out. Now, it's no secret that 2020 is a tough year for most companies, and although Tesla is expected to post growth of around 8% this year, this is not its true growth potential. 2021 does show us better growth estimates here, which is more in line with what I'd expect with this company. And next year, analysts are expecting Tesla to grow their revenue by 40%, which is absolutely monstrous growth, especially in the auto industry. In the last 12 months, the company brought in $26 billion in revenue, so a 40% growth on this would put them at a $36.4 billion in revenue. Now let's just assume they can maintain its 40% growth rate for another year after as well, so for 2022, then that would mean that the revenue would sit at just over $50 billion by the end of 2022. Now, based on the growth that they're expecting for next year, this is very likely, and by the end of 2022, I wouldn't be surprised to see Tesla pull in at least $50 billion in revenue. Of course, this is assuming that they can maintain their current growth rate, but in my opinion, if Gigafactory Shanghai continues growing and Giga Berlin does well, this can accelerate even more growth in the company. As of today's valuation, Tesla sits at a market cap of $173 billion, which is quite lofty, but in the grand scheme of things, this could still be very cheap. If we are assuming in just 2.5 years from now, Tesla will pull in $50 billion in revenue, this means that the company is trading at a multiple of less than 4x when you compare its market cap to revenue. That, for a company of this scale of growth, in my opinion, is cheap, and it's something I'm sure investors are paying attention to. Back in 2019, Tesla had a market cap of $40 billion, and they were pulling in over $20 billion in revenue, so clearly there was some mismatch there in terms of valuation. I, for one, noticed this, I took advantage of this, and we all know how that has paid off so far. But if I look at the stock right now, I think that it's priced like 2021 and 2022 will have strong growth years, and so far Tesla has executed on this to justify that valuation, in my opinion. Now, I know that growing revenue does not necessarily mean that profits are going to be growing, obviously, but Tesla has shown profitability is something that they can do, and as they grow their revenue, their margins get better, and as a result, their profits should also get better. So I'm not too concerned, even if we don't see profitability for the next year or so, because I do believe within the next 5 years, this will be a very profitable company. As an investor, what I want to see from Tesla is this company to continue innovating, continue improving the battery technology, continue improving the autonomous technology, just continue improving the cars and the experience that customers receive when they purchase their cars. And I think that this will just help keep Tesla at that #1 position when it comes to that EV space, and it will just help them grow their market share with auto manufacturers in general on a global scale. So far, Tesla has shown me that they're able to execute on this, they're able to really grow the business as to what investors are expecting, or even better than what investors are expecting in some cases. So as crazy as it may sound, as today's prices of $1,000 per share, Tesla, in my opinion, may still actually be slightly undervalued, or possibly at worst case, fairly valued, which of course is dependent on the next 2.5 years playing out the way we're expecting. But either way, that's still quite remarkable considering where we were just about a year ago. It's really crazy to think that the stock was under $200 per share just last year, but it goes to show you that sometimes stocks are severely mispriced, and if you're patient and have high conviction in your investments, it can pay off bigly. So in my opinion, is Tesla stock still a buy here at $1,000 per share? I think that if you have a long-term outlook in this stock for at least 3 to 5 years, then yes, the stock is still a buy to me at $1,000 per share. But now if you're a short-term investor, a short-term trader, I don't really know how that's going to play out, because we don't really know what's going on with the market here. There's a lot of volatility in the market, and Tesla's one of the most volatile stocks out there. So if market selling does pick up once again, I would not be surprised to see Tesla under $700 per share in a snap of a finger, really. So I wouldn't really bet on this stock stock in the short term for going significantly higher, but I do think that over a few years, it will be at a higher share price than it is today. Now here I have Tesla's chart up, and based on my analysis, I personally would be comfortable adding more shares to this company under $550 per share. Yes, I did say I think the stock may still be undervalued here at $1,000, but this doesn't mean that it's a good entry point for me personally. My cost basis, guys, is in the 200s, so I'm up more than 3 times on my position here. So ideally, I'd want to add more as close to my cost basis as possible. That's because that's where I found the best valuation, pretty much a steal valuation for this company, and I wouldn't really want to pay much more of a premium than I did before. I believe that if we can see Tesla stock under $550 per share, which is quite likely, quite possible, then in that case the stock, in my opinion, would be mispriced and investors would be selling the stock based on fear, not fundamentals. So now I do have cash ready to deploy into Tesla if we see these prices hit sometime soon. And if the broader market, like I said, does correct here in the next few months, it's very likely that Tesla sees a big sell-off as well due to the volatile nature of the stock. I mean, guys, in March, the stock got below $350 per share, which in hindsight was a gift for anyone wanting to buy into Tesla stock. But I know most people didn't bite the bullet there and are waiting for another pullback. All I'll say is that just be reasonable here when you're waiting for a pullback in Tesla, because if you're waiting for prices in the $200 again, you may be waiting for a very long time, as that price may never be seen in this stock again unless we get like a 10-to-1 stock split or something like that. I also outlined a gap here that the stock created recently around $650 level. So keep an eye on this as well, because if the stock sees some selling pressure, we could very well come down to fill this gap before reversing and moving back higher. So we all know Tesla stock hit $1,000 per share this month, and I could not be happier as a shareholder here. I will not be selling my Tesla shares for a very long time because the prospects and the growth potential for this company is still incredibly massive, and I want to take advantage of that as this company continues executing. This company is currently growing at nearly 40% year over year, which, just take a second, comprehend that sort of growth with the scale that they're at already, and that should tell you there's a bright future for this company, at least the way I see it here. And I would not really consider selling the stock until we see growth drop significantly, in a good economic year. If we only see around 5 to 10% growth, that's when I may start selling off some shares. But as of right now, no plans to sell at all. Guys, as always, let me know in the comment section down below what your plans are with Tesla stock. Are you still buying here at $1,000 per share? What's your prediction on the stock price in the next, say, 3 to 5 years? Love to hear your thoughts, as always, in the comment section down below. Don't forget to like this video if you enjoyed it, and subscribe as well to the channel for more Tesla or other stock-related videos. Thank you so much for watching, guys. Don't forget to invest positively, and I'll see you in the next one. Peace.